GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Hello, Jim.
Lies, damn lies, and statistics is what Churchill said. And you're saying pretty well the same thing right now.
Well, I would say we've lived through a epidemic of lies and deception. And it has really gone global, and it has gone mainstream across every sector and every sort of walk of life. So, at different times in history, we've had periods where the scam artists sort of get the upper hand, and I think that's a function of lax prosecution primarily, allowing people to get away with small crimes, and they get more and more emboldened. And also when people are allowed to keep the proceeds of crime and not have to disgorge any profits that were made, that all encourages people to do illegal activities, right? So we've really had that in everything from, whether they're leading charities or whether they're leading corporations, whether they're car companies fudging their numbers and, pushing sales targets onto distribution arms and calling that sold even though they're just sitting on lots, whether it's, Fraudgate with the admissions scandal, kickbacks and insider trading. I mean, it has been rampant, and I think this one will go down in the history books as a really epic period of that. So you see it in the political leaders, you see it in everyone in positions of control has basically, I'm not saying everyone does, but I'm saying all types of positions of control throughout society have been used and abused in this latest era at a very high rate. And so one of the things I think has made it so destructive is it's been really led from the top down in a very spectacular way. So right from the policymakers, right from the revolving door between the government, the regulators, and the corporations, the elite practices that allow certain people to get away with all sorts of crimes. For example, there's a bunch of stories. It's almost too much to mention, but I guess that I put it on the blog on a regular basis because I think there's 2 points here. One, human behavior is remarkably consistent through time. This is not unusual for humans to try and cheat and lie and steal and get away with it. That's actually quite normal throughout history. This has been an era where, as I said, it's largely gone unchecked for the most part. I think that's because of the people that have made off with the proceeds, then have with the wherewithal typically to hire accountants and lawyers to defend them. And because there's that revolving door between regulators and the corporate interests, the regulators have been less incented to go for it and actually, press charges, prosecutors as well. So it's really been a breakdown in the system. But an interesting discussion was on The Current this week. I don't know if you caught it with Anna Maria Tremonti. She was interviewing a author who has written a book, Chris Katarna, The Age of Discovery, Navigating the Risks and Rewards of Our New Renaissance. And this book basically says that, first of all, what I just said, it's not that this is that unusual, it's just that we've been through a very prolific era of this sort of behavior. And it is the precursor to every major revolution and upheaval in human history. And it has, out of the ashes of all that, when everything implodes and the people are finally rounded up and there's kind of a breakdown of social order, is when you get this renaissance or rebirth or change to new practices and ideas for a while. And then eventually you circle back to the same sort of destructive vortex. But at the beginning phases of that, creative destruction, Trumper's idea that you get some really interesting developments and life-changing things can come out of this period. So I think it's important to realize, number one, that our period is not completely unusual in human history. Number two, that although there's a lot of darkness and bad behaviors that have been exhibited, the catharsis of this process, when we finally get an implosion and everybody has to sort of admit mistakes and get prosecuted and put away and fired and all that stuff, you have a period in time thereafter where a rebirth happens. And I think that we have to keep our eye on that good news story as well.
Well, there's a reason why the U.S. is trying to prosecute Edward Snowden as a traitor, because he revealed all the nasty things the government is doing to you.
I think there is a fair amount of that in this. There's some fascinating statistics, like with the influx of the internet, you do have so many more people aware or able to follow world events. And that was one of the statistics that came out of this discussion about the new Renaissance, that in 1990, half the population in the world were illiterate, so only 26 years ago. Today, because of the internet and the access to information that's available through these tiny little devices at a modest cost, you have about a seventh of the world population illiterate. So now you have 3 billion more people in the world with brains that can read and understand and process information. So the potential for human enlightenment in this era has actually never been larger. Now, at the same time, you get some greater problems with this proliferation of technology, and that is the concerns about the oppressive nature of state control, right? So you have to strike this balance in a democracy always between the rule of law and regulations that penalize bad behavior to incent people to do the right things. And you have to strike a balance between that and this oppression of a sort of, monitoring system that looks at everything and it intrudes unduly into personal freedoms. And that's striking the balance in a constitution. That's what the Charter of Rights is about in Canada. And that's why Snowden is this controversial character, because, he was the one who sort of was at the leading edge of this revelation that, hey, governments aren't always using this technological ability in, the best interest of the citizenry. So it's going to be an ongoing battle. Time will tell whether Snowden is, welcomed back to the fold eventually as a hero. I think it's a little too early to say. But certainly he is one of the people challenging the status quo. When I look at the American political process today between the two leader potentials, Trump and Clinton, I would say both exemplify this tendency of this era that I've been speaking of, where they both have highly suspect ethical things in their background and their business dealings, in their failure to disclose certain things. Trump in his failure to disclose tax returns, Hillary in her failure to disclose emails and other information and stuff about her charitable trust, all this. So they're both in positions of enormous influence and, control over various resources, as well as with this interconnection between business and government programs. So it's a very slippery slope. And I think that both of them are sort of very highly tainted, and that I think there's a good chance that they are not going to serve in this era, either one of them. They're not going to satiate the frustration that the people feel in this period where in history, as I say, they historically rise up and topple because the status quo presents too much corruption no matter which color the party is, because it is an entrenchment of a status quo that has ultimately gone awry and has crossed that line between fairness and balance between the rights of the state and the needs of the personal security, because we've kind of crossed that over, so it's now too out of balance. I think the pendulum swings back the other way. So it's going to be very interesting to see, what comes out of this election. But I think in no one's idea is America representing a democratic ideal in this process, whether it be the way in which the electoral colleges are calculated, the way in which the votes are counted, the way in which minorities have a tiny fraction of impact on the outcomes, the way in which the political contribution system is allowed to work right now, the Citizens Read decision, giving corporations all these powers to influence policy. I think it's, the tipping point or a thin edge of the wedge is starting to be seen. I think things like the ECB's or the EU's recent decision about Apple saying that they were paying a criminally low rate of tax, even though they were doing it technically correct through the various loopholes that they were availing themselves of in Ireland and other places. The EU said, I'm sorry, but we have a policy reason to say that you can't pay zero tax. And they've exacted this fine against them. Now they're appealing it, and they've got all these legal resources at their fingertips. But it's the starting point. It's a tipping point where people just say, listen, you're getting away with murder here, and even if you're doing it so-called legally, we're not going to allow it because there must be changes made to right this system.
Well, Ireland said it was scared to charge Apple, the tax that it was owed because it would withdraw all the jobs that it's created.
And this is the great fallacy of our era, right? We've been losing jobs at the fastest clip in many decades. The manufacturing jobs and the highest paying jobs have really not come back from the 2008 recession. They quote this 4.9% unemployment rate in the U.S. as success or evidence of recovery, when the reality is that it's only because a huge portion of people have dropped out of the workforce. And if we didn't have that huge decline in the participation rate, the unemployment rate in the U.S. would be 13%, not 4.9%. So this whole idea that you have to let corporations away with murder, that you have to charge them nothing, that you have to give them all our resources for a song, that you have to give them free water, all this so that they create jobs. We've obviously run to the end of that road where we realize that this system is not creating jobs. The jobs continue to leave. Automation, robotics, all that is going to continue to make that worse. So we have to look at a new way to transfer dollars through the real economy. Because right now we've got money stagnating in speculative activities all over the world. You've got no real production. You've got people having to try and save more because the rate policy, driving rates into the ground and below to negative rates, in the thesis that this would spur consumption and borrowing, has proven to be absolutely devastating because people are having to save 3 times as much today as they did, 15 years ago just to try and come up with the same amount of income in retirement. Pension companies, insurance companies, these are companies that require a certain minimum amount of income from their assets in order to pay out their liabilities. And they're not being able to make this balance. And you're starting to hear more and more people speak out and say, hey, we're not magicians. We can't make this balance. We have to get some more, we have to get reasonable interest rates, reasonable taxation rates all back in the system before this will work.
We'll have more with Danielle Park right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Sorry about that.
That's okay.
I'm getting a cold, I'm not sure.
Zinc vitamin C lozenges, if you think you are.
Okay.
The British Cold Research Institute says that will reduce or even prevent your cold. That's what I do as soon as I feel that tickle in the back of the nose.
Yeah. Well, you have to keep your voice good, right?
Well, you too.
Mm-hmm. Yeah.
But they really work.
Yeah.
My wife thought she was getting a cold the other day. Zinc vitamin C lozenges. She's perfectly healthy.
Zinc vitamin C. Okay.
Yeah. You can get them at Safeway. They're in the health food section.
Okay.
But whatever you do, don't brush your teeth or drink milk afterwards, because it'll take away the vitamin C and you'll just taste zinc. It's awful.
Okay.
But apart from that, I swear by them.
Okay.
Welcome back. We're speaking with Danielle Park. Danielle, the glut of oil. Now, in the U.S., they just said they actually used up a whole lot more oil than they expected over the Labor Day weekend. But is that going to be a long-term thing with stockpiles declining?
Well, you see, the interesting thing about that is there was a big build in distillates, but no one mentions that. They focus on the drawdown in the oil supply, but they don't mention or factor in the reality that the hurricane had a major impact. It shut down capacity on the Florida coast on that whole Gulf of Mexico coast last week, and that has an input in the numbers. So the drawdown may indeed prove to be short-lived, as it was more to do with the inability to get supply in rather than a huge increase in demand. So I think the trend in demand continues to weaken in the world, and oil, even though it's balanced the past couple of days, the imbalance is still not, rectifying itself. When you look at the factors of slowing global demand, indeed recession spreading in many major economies in the world at this point, and you still have incentive to pump out because a lot of the producers are so in debt that they need to keep producing at almost any price just to try and get cash flow in. So it's likely that you're going to see another year at least of glut conditions in the world, and that may be very dangerous for, as I say, these over-levered participants, speculators, investors, people who are, counting every day on a big bounce back in this key commodity. Meanwhile, for the rest of the world, the answer lies in lower prices, not higher prices, right? So if you look at the benefactors of the credit bubble that has gone on were the ones who were selling things at highly elevated prices. So whether it would be in the housing industry, whether it was in the financial asset sector, people who are making commissions up front on these assets were making a big jump in their income as a result of this. But everybody else is less efficient, less wealthy, because they are now trying to pay off these overvalued assets. And so there's a natural tendency from a demographic perspective, but also just from carrying cost perspective, to lower your consumption levels. And that's happening, and we're getting, as we said, with technological advances are happening in all sorts of areas that are enabling people to become more efficient, and now they have this incentive to become more efficient. Like, one of the big problems today is, the whole since 2008, one of the big stories has been that the car sales has bounced back with a vengeance. But as we've discussed many times, the only reason that it bounced back the way it did was that people were taking on insane amounts of debt, and all this creative lending stuff and securitizing these bad loans. People who couldn't actually afford to buy cars were basically being given them to drive off the lot for zero down and 7-year payments and all that. But the problem is that we now have, just in America alone, we have more than $1 trillion of auto debt right now. So even at these, no to zero rate, very low to zero rates, people's average monthly payment on an auto loan right now is $500. So that tells you, if you think about that, 26 years ago we had a car loan, and it was at 12% interest, and it was $500 a month. Today we're at 0% interest, and people have $500 a month in payments. Why is that? Because the asset price has gone up a lot. Why is that? Because of the credit bubble. So the same with housing. 39% of Canadians surveyed say they were having incredible stress with their debt loads right now. That was a stat that I heard yesterday. And that's not because rates are high, obviously. Rates are really low. It's because they've taken on so much debt to try and reach for these inflated assets like cars and real estate and education, which has gone up 9% a year over the last 15 years because of the whole underwriting of the student loan bubble enabled by the government. There's now more than $1 trillion of student debt in the system. Corporate debt has doubled just in the last 8 years thanks to all this incentive to loan money, borrow money cheap, and buy back your own shares, and all these destructive habits. So we've got a doubling of national debt in the United States. We've got huge jumps in this household debt. Something like $12 trillion in the U.S. is the household debt figure now, and almost $2 trillion in Canada. of total household debt for our tiny little population. So it's naturally going to suppress our ability to consume things for the next several years, and that's even if rates don't go up, and eventually rates do need to go up. So I think we're at the tipping point here is an intergenerational transfer that needs to happen between those who are currently holding overvalued assets and those behind them who they need to, the people holding the assets need someone to buy them off them, right? To create liquidity, to give them money, whether it be for retirement, to cash out, whether it be to transfer to their heirs in their final testament. The point is that if there isn't the ability to buy them at current prices, the answer is lower prices. And that will be a weighing, deflating trend that will have to carry on for some time here until that equilibrium is reestablished between the value of things and the price of them. You know, a shelter is not more valuable to us at, $1 million than it was at $500,000. Your home where you live is not more valuable today in real actual utility terms than it was 5 years ago, but the price has gone up so much. And that is the problem. That makes us all less efficient, less productive, and less able to do real investment in the economy. Because all that time you're spent paying off cars and houses, even if they're at minuscule rates, is time you're not able to save and invest in other productive activities. And therein lies the rub. That's why it's taking people so long to get around to any actual savings. And when they get there, they're finding that, oh my goodness, because yields are so low, we need to save 3 times more than we thought we did 15 years ago. So all these factors are making people realize they have to downsize, get more efficient, and in order to have real, true productivity gains in the economy, we can't just buy non-productive assets or, 1,000 pairs of shoes and store them in a closet. That's not going to help in terms of actual productivity. We have to instead figure out ways to build up savings and get that savings directed into productive activities and investment in the real economy.
Would a person be better off renting and taking any money they have left over and put it into a savings account for retirement, or take that total and put it into real estate?
Well, it really depends on the area you're in. So one of the things that's happened in the past few years as well with this, again, since the 2008 collapse, the car bubble really went crazy on auto loans, and that was top driven as well. That was auto sales companies, setting targets and forcing people to take down product and book it as sales. There's an article today about Fiat Chrysler and how they had to just restate their actual reported sales growth because they had done a bunch of basically fudging of the numbers, and when they restated it, it shows that their sales growth actually topped out in 2013, and they had recently been reporting that it was growth on growth on growth all the way up to 16. They've already revised back 3 years. So what's happening here is if you're talking about rents, a lot of like central banks of the world, increased the global money supply to such an extent in the past few years that there was all this superfluous capital flowing around looking for something to do. And it went into things like real estate. So a lot of people that had savings after the collapse diverted it into private equity companies that bought up whole subdivisions and condo buildings and all this activity in the real estate sector because rates were so low. The problem is that they built superfluous supply all over the place, and also that they were thinking of it as investments. So they were turning around and trying to rent it out to people, which started out well and good. But as prices went up, they tried to scale the rent so much that now renting has become prohibitively expensive in many areas. So all of a sudden, the dynamic swings back to maybe it's cheaper to own. So it really depends on where you live and what your personal financial scenario is. Because ideally, it is great to have a house, a shelter that's paid for. But the fact is that there's negative carry on even when something is, even if you don't have a mortgage on a home, there's going to be maintenance costs, taxes, all sorts of upkeep that actually cost you quite a bit, insurance, all that stuff. So you really have to do the math in depending on where you live relative to what's available to rent and what the prices are in terms of buying. But it's just not a simple question. But I'm just saying that instead of, we can't afford these blind slogans like, oh, you need to get on the property ladder, and that the idea that investing is something you do at every price point. At certain price points, an awesome asset is a horrible investment. Like, it will just demolish your capital because you're paying such an insane price that you've disconnected from the reality of what's mathematically feasible. And I think that's what you have to avoid. The idea, there's no such thing as it's always good to buy real estate. There's no such thing as it's always good to buy dividend-paying stocks. There's just nothing like that. It's always a function of price, risk, and what you personally can afford whilst continuing to build savings and do other things that you need to live.
Danielle, thank you so much for chatting with us.
Oh, my pleasure.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward questions to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.